Going on, guys? It's Stingray here. I'm just going to do a short video on my daily biases. This was a requested video, so I'm just going to go over basically what I look for um, to run trades past a normal just level to level trade. So the normal trading style I do is scalp basis from level to level, but something that's commonly mistaken is I don't just look at the lower time frames and just try to pick out 15-minute patterns and 5-minute patterns and hourly patterns. Is I actually try to frame my time frames or frame all my setups from the daily down. So I try to start from the daily, the H4, and then the 1 hour. And something you'll notice is that these aren't any groundbreaking patterns. These are some pretty normal patterns. But the way I like to do it is kind of frame a setup that I would be taking on a low time frame on the same time frame as well. So you'll notice that like SFPs or range sweeps, for example, I'll look for those on the daily as not necessarily the next day is going to be an up day or the next day is going to be a down day, but I know what trend I'm going to be riding and I know where my swing trade target would be, so then I can scalp in the direction of that trend. So we're going to start this session on the whiteboard, and then we'll look at a few more examples, and then as part of my range primer and SR primer video, I'll do just one section. I'm going to do that 3-part video on that, and I'll do one section just based on, or a live breakdown of just me finding as many daily biases as I can. So the first part to this is basically you have to determine the market profile. And the 3 market profiles I basically categorize everything in is trending, reversal, and then consolidation. I basically believe that you can encapsulate any market into these 3 profiles. And if you can't, then you might as well just sit out. Because if you can't classify it into one of those 3, then it's pretty much just unclear to you, or it's choppy, or it's just not tradable price action at that time, right? So there's no harm in just sitting out. So basically, when I'm looking at a trending market, I'm looking for something that's like Bitcoin recently in clear trends, no signs of maybe like short-term reversal, but long-term, the monthly, the weekly, the daily are still looking pretty bullish, right? Okay, so reversals, then what am I looking for? I'm looking for maybe high time frame range sweeps, maybe coming into key levels on the monthly and weekly time frame, and on the daily, it's starting to carve out a swing low, right? So that's what I'm looking for, reversal type of profiles. And then consolidation profiles, where you look back the past 2-3 months and it's just clearly in a range bound environment. There's no signs of it breaking out one way or another. Each time it tries to break out, it just snaps back. So that's basically the rough breakdown of what I'm looking for the 3 market profiles. And then you'll notice that a couple of these patterns can be put into different profiles. This isn't the be all end all, but this is just like the basic off the top of my head, what I just put it into. But so basically, based on the market profile I identify, then I'm looking for these kind of biases within there. So I'm not always looking for everything. I'm saying, okay, what is the macro market profile? Once I identify that, then I'll be looking for, okay, these are the 2 or 3 types of daily biases that I'm looking for. And you don't always have to have a daily bias, and it doesn't always have to be on the daily, right? So like we talked about earlier, I believe that everything in price is fractal. So what I mean by that is that if you can find one pattern on the M5, you can also find it on the H1. You could also find it on the daily. The only thing that's different is holding time. If you're going to trade that same pattern on the daily, you have to be prepared to hold it for multiple days for that pattern to play out. Versus on the hour, you're going to be holding it for multiple hours because each candle is going to be an hour, right? So instead of picking that daily bias and then saying, okay, I'm going to take that swing trade with it there, I could just very well scalp in the trend of that because I know what my overall objective is. So basically, when I'm looking for the most simple one, so trending. So we'll start from the top and work our way down. The mean reversion of the range is the most complicated, but it's not too crazy. But basically, like I said, this isn't anything that I've invented. This isn't anything groundbreaking. This is just stuff I've picked up along the way from my mentors, and all credit to them, SC, ICT, Dante, and then even Bitular. I use the range sweep from him quite often. So this isn't, like I said, anything that I came up with. This is just quick and dirty ways for me to kind of establish biases. So when we're looking at trending markets, the easiest one is the range breakout. So if we have a current piece of price that we're looking at, and the way I like to use the range breakout is also in confluence with market structure. So the reason that I use both of them together is because it helps you kind of clarify what the major swing points are in the market, instead of saying, okay, every little swing high and swing low is a break in market structure. I like to use this because then it says, okay, this is the major legged price. It's established the mid-range. It's found support at, let's say there's probably going to be a SR or supply and demand level like right here. And it's found support there, and then now it's rallying and it's broken above. So it doesn't have to be a clean breakout, find support on the range high, but it basically just has to be holding market structure. Usually I like to see it pull back about to the 50%, maybe a little bit deeper, but as long as it holds this range and it starts making bullish market structure outside of this range, right, then I call it a range breakout. So that's what I use for my simple range breakout. And another common pattern you'll see is something like this. And this is something I've seen often, right? If you have a clear target up above, like up here, if that's a clear target, then you'll also see this pattern play out pretty often, right? right? So that's just another kind of form of that. The swing point. So I like to use a 4-candle swing point. So basically when you see a pullback and it's holding bullish market structure, because this is the easiest way to stay on like the long-term trend, especially in a trending market. So if you look at any time you have a huge bullish trend or huge bearish trend, if you can catch even the third or fourth candle in a swing high or swing low, you're pretty much going to be on the right side of that whole move. So basically once you wait for this 3-bar candle, this is a pending swing high or swing lows once you have 3 bars. And then once it closes, it breaks and then closes above this open, or if this is reversed, it would be the close. If this is reversed, it'd be on the other way, right? It'd just be a 1, 2, 3, and then 4 bar. So basically once you wait for this to close above that close right there, that confirms the swing low, and then you can kind of scalp in the daily trend. So when you have a daily bias, it doesn't mean that every single day subsequently is going to be an up day or a down day. It's just that you're trading towards that target. So you're basically just on the long-term trend of things, right? And that's basically what you want. So for reversals, I kind of classified SFP and range sweeps into the same thing, and I'll show you in price action later. But if you really look at it, the main thing that Dante really puts emphasis on is time and price, right? So if you look at it, puts in the high, kind of comes back up, retests the mid-range, and then kind of space, and then retest, sweeps that, and then reclaims, and then rallies, right? So if you really look at it, an SFP and a range sweep are pretty much the same thing, but the reason I like using the range sweep more in that kind of context is because the way BitDealers framed it, you actually have a full kind of process to how you identify it, what a proper one is, how the high odds ones are formed, right? So I like it because it's a lot more process oriented and it's a lot more defined. So that's the way I trade that. So you guys can look at BitDealer's video on this, the range sweep. I trade it the exact same, but basically you're looking for it to establish the range, come back up, retest the mid-range, spend time there, and kind of give us a nice rounded retest and SFP that. And I do trade it also if it false breaks this then reclaim, but it has to be a pretty quick false break and reclaim. So I'll let you guys go check out that video. And then the same thing for consolidation profiles. You can trade the same range sweep. And then when we go into examples, I'll show you examples of why I think SFP and range sweep are so similar. And then the last one is mean reversion with ranges. So this is kind of something you guys have probably heard often, but the thing is like when you're trading in a consolidation, and this is the key to this, right, is you don't want to be doing mean reversion with ranges when you're trading in a trending profile. Because if you're going to be trying to do this over here, then you're going to get fucked, like straight up. You're just going to be on the wrong side of the move. So that's the most important part. You have to be able to identify the market profile, and if you can't, then you just sit out. So basically, once you have a range, you establish the current price leg you're within. You just play the range from extremes to within. You don't know how far it's going to dip into the bottom half of the range or the upper half of the range, right? So that you're basically, when it's going down into this is basically look at oversold, right? Or when you're in the upper half of the range, this is looked at as overbought. So when you're trying to mean revert, you're basically looking at, okay, if this is in the oversold part of the range, we've come into a supply zone, it's starting to carve out the swing low, then I'm looking to take it into the mid-range. And you don't know how far it's going to go past that mid-range, but you're basically looking to take it in the mid-range, and then you can look to take partials, and you're basically looking for important structures up here. And you're basically just looking to take it from up here to down here, and from down here to up here, from up here to down here, and you're just playing from support level to supply and demand level, and that's it. You're basically just playing liquidity within the range, and I'm basically targeting the mean or the midpoint of the range every time I'm looking for extremes. And that's basically just the quick and dirty way of how I stay on the right side of high time frame flow. And then I'll do the first part of my SR primer and range primer example, and we'll kind of look at a couple examples from that. But real quick, we'll look at 2 examples right now. So we'll delete all that. So I could just pick a nice random piece of price action. We'll pick this right here. I like this. So if we look at this right here, right, we have a consolidation profile, ranging, breaks down, ranging. So if we look at this range right here, what's the price leg we're within? This high to this low, okay? Makes a low, consolidation, rallies, retest the mid-range, comes back down, rounded retest, and swing fails this low right here. You see how clean of a swing failure this is, and it comes up and retests up here. If we fast forward this a little bit, close this, sorry. So if we fast forward this a little bit, we can see this actually does end up playing out nicely. But you see how what I was saying is it doesn't mean you're going to be on the right side of flow every single time. You're going to have these up and down moves within that pattern, but it just means that if you know that this is the target up here, that you can keep partials on and kind of trail your stop loss each time because you know you have a high time frame target. So that's just one. And if we look at the same thing, look, you can look at this as an SFP as well. right? It's that time and price theory. You come down, make a low, nice rounded retest, comes back down, swing fails, and then rallies off. And then you can look to see, okay, it's going to come up, fill in this void into the supply zone, right? So your first trouble area after this would have been this up move right here. So you would have been looking to take it into this supply zone, and then this supply zone right here. So if you're trading as an SFP, that's what you've been looking for. But that's why I like using the range, because you have a lot more defined targets. You know where to put your stop loss. You can look for supply and demand zones within that range. Okay. And then the swing point one, just real quick, and then we'll show mean reversion examples in the SR primer video. But the swing low example right here, so you see we have a couple 3 and 4 bar swing lows. So you see this one is a 4 bar swing low, but it doesn't quite pan out, right? So you have the 1, 2, 3, and then 4, right? Breaks this high, so that's the confirm. So you have a couple updates where you see saw this nasty wick, and then you kind of come down, and then this makes the proper swing low. So this is candle 1, 2, 3, and then 4, and then you're on the right side of this whole move. And then the same thing right here. 1, 2, 3, 4, right? Same thing right here. 1, 2, 3, 4, and you're on the right side of this whole move. So basically, once you wait for the trending market and you can identify that profile, then that's when the swing points are like literally the easiest thing you can do to say, okay, I see a swing point on the daily 4 hour. All right, we're going to scalp in that trend direction. And that's like my favorite thing to do, but you don't get trending markets very often, right? You only get them 20% of the time. Markets are ranging usually about 60 to 80% of the time. So that's just something to keep in mind. But that is the basic daily bias video and how I look for daily biases.